Hello traders, this is Greg McLeod from Elite Traders University, and it's good to be with you here for our session, our Pip and Run market map, and we're going to get started in just a few minutes. This is for the week of February 26, 2017, and this is brought to you by Elite Traders University, and this is the Pip and Run market map, and we're going to look at key levels of support and resistance and looking at opportunities in the market, as well as what news that could really drive the markets in this coming week. Now, before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading before we begin. And for those of you who are brand new, don't know who I am, my name is Greg McLeod. I'm a 21-year trading veteran, founder and CEO of Elite Traders University. And I've traded options, futures, stocks, and Forex. I've been trading since 1996, and I'm the foremost authority on short-term day trading and scalping. I've spent 8 years as a currency analyst and trader coach at one of the largest retail Forex companies in the world. I'm also I had 16 years of experience teaching public education, high school and junior high school, and I also worked at a prop trading desk and a top-tiered U.S. bank. So I'm uniquely qualified to analyze the markets and to show you potential opportunities that can make you money in this week. Okay. Now, the order of operations today, our agenda for today, in this edition, we're going to look at key levels of support and resistance for the majors and gold, and the possible scalp entries and targets. And also we'll look at high impact news events that could move the market as well. So let's go ahead and jump into the charts. And we're going to start with the euro, and the euro is one of the most widely traded currency in Forex. And what I do is I use top-down analysis. I like starting out with the 50,000 foot view. As you know, I like starting off of a daily chart and working our way down to the smaller time frames. Well, Greg, you're a scalper. Why are you looking at the daily chart? And I wanted to emphasize and point out to you that the daily levels of support and resistance are what big areas where big buyers are going to be, big sellers are going to usually be. And so when price gets to those areas, and if you're on a 1 minute or 5 minute chart, they could provide explosive trading opportunities. Okay, so we can see that the euro has basically been a downtrend and has been moving sideways since April of 2015, and we're basically, we're near the lows. We revisited those lows back in December, so we basically have like a double bottom here. We got a nice move up to the 107.80 area or so, 108, and we've pulled back since then. So we're coming down to levels of, these levels are daily levels of support and resistance that I've put into the trade. Basically, I have drawn these levels since here, and here are some new areas, but you notice how price is respecting these older areas. Okay, so we can see that we've pulled back after reaching a high of 108.33. We're bouncing around at 105.09. So we'll call it 105 the figure. Whole number, round number, 105.00. Got as low as probably at 104.89 or 86 or so. But this is moving downward. We have lower swing highs and lower swing lows. We did get a rebound here, like almost a pseudo hammer, and we bounced up to this 105.87, and look, we got two inverted hammers here, little shooting stars right there, and those are bearish because price did rally up above it but closed back below this level. Like I said, these levels I drew back at the beginning of February. I have not drawn any new ones, and we can see that though these levels were drawn 3 weeks ago, they are being respected. So I suspect that the euro will continue to move down to the 105.09 area, and even maybe go into the 104.50 area. Okay, maybe where this wick where we got a low about January 11, 2017, we may come down and test that 104.50 area and maybe get a little bit of a rebound there. If this level fails, we can see price move from 104.50 and move clear on down to 103.39, and if we bust through that, then look out, Jim. We've got a long way to go to fall. Okay, So let's go on down to spend a lot of time on the euro. Let's go on down to a 60-minute chart, and we can see what could go on here. And you can see that we've zoomed in. These are those daily support and resistance levels, and we can see that price, big wide-ranging bar. We could get some type of a counter move back up to retest the 200 simple moving averages there as well. Price can rebound there, but I'm looking for a move down to this level to retest the 105.09 and maybe even lower, even down to this 104.50. Okay, at least maybe you can retest this low here at 104.97. So I'm bearish on the euro. If we're saying bulls versus bears, I think the bears are in control. They're large and in charge, and we'll leave it at that for the euro. Let's go to the pound. Start for a 50,000 foot view, the big overview of the market. And we can see our daily support and resistance levels, and we can see that we've just again been in a range, high of like one spot 2800 down to a low about one spot 19914, and we can see lots of consolidation in this area, failure to break to new highs, and we're making new swing lows, a lower low, a lower high, kind of a little higher low. So it's kind of like a triangle, and we look for some type of a break, maybe a south side break that would take us even lower. Maybe we might even retest this low down here at the one spot 19914. But let's go down a little bit, down to a smaller time frame, to 240, and we can see that we had a nice little break. We had a trend line break here, and price did work its way back up. But we're finding lots of resistance in here where we just moved sideways. Big red bars are just telling us, hey, we have probably more to go. There is a rising trend line here. We could possibly watch that there might be some type of a rebound or a test. But if we break that line, and we'll draw that line right here, that blue line, we can see that we've had some higher swing lows, right? But we've had this descending line as well, right? And we've had a little bit of a breakout of a triangle break. It didn't hold. It's testing the trend line, but if it keeps going, we got 1.2427, right? We break the trend line, and we can get down to one spot 2380. Okay, so that'd be a goodly amount of pips there, and from there we can even move a little bit. We can move lower. Okay, and let me move up this chart here. Yeah, one spot 2300. So this would imply that the dollar might be pretty strong, and what I would like to do is to bring out a dollar index chart, and we'll do that when we go to Forex Factory, and I'll show you there. But let's keep going. But it looks like the dollar is large and in charge here. Let's go to the Aussie dollar. We'll go Aussie, start for a 50,000 foot view there, start at the daily chart, and you can see a couple of big red bars there. But this was a big move, okay? And remember I showed you the double bottom. If you've been following the program for a bit, you can tell that we had this launch. Price came down to the 0.760 area back in May 24, 2016. It rose up. Then we dropped down to that same level, on the December 27, 2016, and we just been in a severe uptrend. And even when we pulled back down here, I said draw a trend line. That's my old trend line I drew, and we got to close above that. And look how many pips we had from 0.7550. I hope you guys took that trade. It's about 200 pips from that time I drew that line, and we have been moving up since then, right? And then we've stalled out there. But you notice how we're making new highs, but they're not really that big. They're kind of sideways. Usually when we get this kind of undulating prices falling back on itself, that's telling you that this is probably going to fall or drop. Has a good possibility. There's no absolutes, but it has a good chance of, if we break this break below 76 0.7655, if we break below that, we could possibly see a big down move in the Australian dollar. We could see, it could be pretty huge. And I'm going to take a little Fibonacci from the low around that 71.60 area all the way up here to the old high that we made back in February 20th. And we can get a move down to the 38% retracement at 75.20, and we're currently at about 76.60. So that's like a 140 pip drop down to that to this area here. Okay, so we can see a move down to this area, and so I'm looking for a trend line break for confirmation, and I'm looking for a move on down the road here. Oh, and I don't want that. We'll get rid of it. Good, it's gone. Okay, but we can see. I'll draw a line. If I can draw a line here, I can probably see first target 76.09, right? And then I would see another target down here at the 30% retracement, 0.7520, and might take some time to get there. The 200 simple moving average might meet it up there as well. And if we break that, then I see a move maybe down to 74.52. Now, on the other hand, if something happens, and things do happen, a break above 77.41 invalidates my bearish outlook, and we could see quite a bit higher there. So watch that old high, 77.41, and then, but see, basically, this is a double bottom target, is the middle part of that double bottom. The next target would be 78.40, okay? So if I'm short and this does a U-turn, does something wacky, breaks the high, I get stopped out, I'm long up on the break of the high, I'm looking for a move there. So I'll make back what I lost, because I know now this wants to go higher. However, we're bringing lots of congestion up in this area. We look for a drop. Let me get down to the 60-minute chart, and we can see if we can get a better entry, and we can see that we did some topping action here. We could even drop down to 76.55. This has been doing a 1, 2, 3, 4, 5, so we might see some of an ABC correction maybe off this low 76.55. We might see some type of a little rebound up, which will give us a good shot to short this, right? Because it's been moving down, and sometimes what happens is, okay, I'm going to short, and then the thing goes up on you, and you lose even though you're right on the direction. So you want to see some type of a rebound short. Now, remember, I had drawn these arrows before. I said, hey, we bounced off this area, and we did. We came back and retested the low. We did come back and test this 77.87, and we even broke to a new high. Okay, so my last week's, I said, hey, if we break that 76.86 area, and sure enough, that's what we did, right? And we did break down here. And if you got short on that, and it broke back up like that big candle told you, hey, you're out of this. You should be stopped out. Great, love your stops, because the stop is telling you where you need to go next, right? Especially if you got the lines drawn. And then feel free to screenshot this as well. Okay. All right, let's go ahead and keep going. Let's go Kiwi dollar. I love Kiwi. What's one of my favorite? I love trading everything, right? So, Greg, everything's your favorite pair. Pounds your favorite pair. Euros your favorite pair. Like, anything that makes me money is my favorite pair, buddy. I'm sorry, but look at this. Whoa! Double top here. 72.32. Look at that, baby. That's pretty bearish. All right. Now, nothing's guaranteed. There's no absolutes in trading, because this could turn around and head back and blow out and make a new high. But usually, the target is usually this down here when we have a double. This is like that on the Aussie dollar. We saw that double bottom, and the target was the middle part of the W. Well, this is an M, right? See the M, up, down, up, and then we expect price to come down. 71.27 looks pretty good. Again, this has been moving down 1, 2, 3. I like to see it move up, tag this breakout point, and try to get short on the pullback. Okay, that way you can you can see some type of a, if we can get it. Now sometimes it'll just drop and keep going and you missed it. Hey Greg, I waited, I didn't get it. That happens. I'm sorry. But sometimes the market doesn't do what you want it to do. But if you got short and then this thing rockets back up on you, it's like, oh man, and then it goes down and now you feel bad because you were right about direction, but your timing was off. Okay, so exert a little patience. You might not catch every one, And remember, there's always another tube leaving the station or another train leaving the station, as they say out here in the States. And in the UK, they say a tube, and I guess because it's a long train or something like that. Well, hey, if it goes, whatever it is, there's always another one around the corner, right? So ideally, I like to see a move back up to 72.05, maybe back up to these wicks, 72.15, 72.25, short it for a move back down. And I look for actually 71.27 to come into play. This is for the Kiwi dollar, all right? And because we did see the 50,000 foot view. I hope I didn't skip that. Always want to take a look at that. Oh yeah, I sure did. And this is our view, and it looks similar to the Australian dollar. We see kind of a consolidation in this area where price double bottom, rebounded, and we got these red candles coming. So we could come down and keep moving lower. Okay, even the 200 moving average looks kind of nifty. If this is some type of a 100% expansion target, then we look for maybe price come down to the 70.53 area. We're currently at 71.90, right? So that's like 140 pips. All right. Okay, look at that one kind of backwards. Let's look at cable. Okay. Do we think we looked at cable already? Yes, we did. Most certainly did. Okay, let's look at the Canadian dollar, dollar CAD, 50,000 foot view. Now, this would be the opposite, right? I looked at try to look at all the pairs that had the dollar in the back. Well, this one actually has a dollar in the front, so we expect these to go north, okay? And in fact, I've got some fibs drawn. But what we're doing is we've got all this consolidation. See, the price came down strong. Bears are in control, large in charge, large ranging red bars, bouncing off this key levels of support here, and not able to make new lows. In fact, it failed. The bears failed to make this. This was a low that they made on, say, January 31st. It got down to 129 and 129.59 or so, right? But then they could not make a new low, a higher low, a higher low, and then the bulls took control. Bears tried one more time. Thrust. Oh, they're unable to advance the ball. Bulls take control. Boom. Bears try again. Push. Boom. Tweezer bottom is a bullish reversal pattern. And, if you email me, I'll give you access to a free lesson I did in candlesticks that I did for my special open house, my all access pass. And so send me an email at greg@elitetradersu.com and I'll send you that. And we can see that we have this reversal pattern right there, and we can see price. If we get above 131.19, look for a move to 131.51, and then we look for 132.00. Look at that empty space there. I mean, there is a couple of daily candles I kind of missed there. I'm gonna put my horizontal line there. Okay, that's a new one I added. I don't add them that often because hey, I only have to look at this chart, once a day. Right? This is a daily chart. But usually prices respect the older levels. Now this is time we didn't get a close. Notice we didn't get a close above. We just got a spike high. I just put a line right there. So we expect price to come back and take out this 32.12 and fill this big gappy area back up to the 200 moving average, about 132.63. Okay. 132.63. That is long as these lows, all these lows provide a lot of base. The wider the base, the higher the raise. So we look for dollar CAD to move up this week. All right, let's go down. I'll give you a little teaching, a little bit of coaching, and let me know. Did you like it? Did you enjoy it? Send me an email. Tweet me out. Say, hey, I just saw the video. It was great. Or hey, it sucked. Or whatever. Give me some feedback. Let me know you're out there. Let me know you even care about this. All right. Because I got this, but I want to make sure you get it, and it'll help you. All right, so we've got this bottoming pattern here, in which we have a consolidation, a launch pad. They're accumulating orders there, and we look for a price to launch and maybe come back and tag 132.12. So that's I'm bullish, especially if 30.79 continues to hold as support. Then I look for this baby to rock and roll to the north side, baby. All right. Let's keep it going, keep it hot, keep it popping, keep it spicy, and let's go ahead and take a look at yen, at the dollar Swiss. Okay, and if you look at the dollar Swiss there, And a lot of people don't like the dollar Swiss because, hey, the Swiss National Bank. And I go, yeah, well, guess what? Swiss National Bank, they do not want a strong Swiss franc, right? And so we did. Now we did a topping formation. I did point down that we would have this kind of a, and ever since that level there, we had been working down. However, what's been going on now is we are seeing some buying stepping in, unable to penetrate this 98.86. We did wick below it, but we couldn't close below it. And now every daily close is higher, higher, higher. We have higher daily closes. That's a key, people, that we have a trend change, all right? So we didn't get all the way down to the bottom here. And here is what, I was looking for a rebound there. We did not get that, right? And we tried to rebound from there. We did not get it. We finally got the move to the north side that I was looking for. And we did bottom out at the 98.86. And we have tweezer bottoms just like we had in the dollar CAD. We got tweezers. Tweezer is a bullish formation, 2 wicks. Again, you can get my free candlestick guide that you can put it next to your wall and go, hey, that's tweezers. That's what Greg was talking about. And he's like, yeah. And we look for a break above the high. We trade this by a break above 1.0070. Then look for a move up to 1.0131. And we can look for bunch of stuff that is going on in here. This 10200, right? But I think we might even get up to this wick, 10242. Okay. Now, so looking for, as long as we can stay above this rising trend line that was basically the low we had on January 30th, and we had like kind of a reversal. Okay. And so if we break below that, then we could probably see a retest of the 98.86 area. As long as price can stay above the line and not break those tweezers, then we should see an upward move, and maybe even back up to this old high, maybe at the 103500. Okay. So remember, it's an inverse relationship to the euro. So if the euro is going down, this baby is flying higher. Okay. And so here is our dailies focused. These are daily red lines, are daily support and resistance placed on a 60-minute chart. That's the way I look at classical support and resistance. And I draw them out by hand. But usually once you put them in there, you don't have to draw anything else for a long, long time, which is good. So we did see price basically making higher closing highs, and we might even see a pullback here. We got a tweezer, kind of a pseudo tweezer here that's bearish. We may want to wait for this bearishness to finish off on Monday. Maybe Tuesday we get a rebound off 100.667, or you're looking for a break above the high to take you back to 1.0137. Okay, so look for a pullback. Maybe we might get a little weakness, and then maybe a pop up higher. Okay, that's dollar Swiss. All right, and let's get to the yen pairs. I want to get to the yen. Yen's been super strong. Anytime you've got things that are not stable, the world's kind of on edge. You don't know what kind of government that's going to take over in France. You just don't know what's going on maybe in the U.S. Right? Well, now here is what I had posted a while ago. I actually posted it on Twitter, and if you got that, guys, let me know. Let me know if this stuff is working for you. I said, hey, now we didn't get. Okay, I was looking for a trend line. I was actually looking for I was looking for a price to come back here, but this was like a head and shoulders, and we had a break. And I said maybe we get a rise higher and a drop, but we rose a little bit higher, but this dropped, right? And then rose up, and then dropped some more. And we got as low as 111.91. I did post that on Twitter. I said, hey guys, we could get down to 111.00. We actually got to 111.90, and I think we still have more to go. 111.52. I mean, once we broke that, and you see how fast, I have no daily support or resistance here, and look how fast price moved, because there was nothing there. It's like an air pocket. Price came in, filled that, and we look for 111.52, and just there's lots of open space for price to come back and test this old low and then break even lower. So I think we continue to move lower in dollar yen. The yen continues to be strong, super strong. Okay, Let's take a look at gold. And gold spiked up. And remember I said that on last week, I said we should see a spike in gold. And hopefully, guys, I know a lot of people trying to short it, but it's like, I think we go higher. I think we gap. We break. See, basically, we had this gap down, boom, 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 and we're filling that area, and we could see a massive move in gold. 1265 breaks. We got two bullish candles, kind of weird. And you think, well, Greg, is that a tweezer top? Those are really weird closing candles, and I've seen lots of price action, but you've got this kind of like it's almost like a double signal for a long, okay. And we might see, but I think our key here is 1265.03. We break 1265.03. There's really nothing there. We have an abandoned baby gap. It was filled. It was filled by that long wick. But I think we go back and fill that area to 1308, and we can see an explosive move in gold. Now, once we get that explosive move in gold, we could see a decline. But I think we have a move higher. Okay. Let's drop down to a 60-minute chart and take a quick gander at that. And we continue to make some new highs. Now, the bearish scenario on this, because if we do break back below 1251, then I think we have a really long way down to go. This could have been some type of an exhaustion, kind of capitulation, like one last push, and then totally exhausted, and we just totally collapse. Okay, so the thing is, really, no longer a trend goes. This has been going on for a while, since the beginning. Look at that. All the way back to 2016, from like December. The run started like December 15th, and we were running from December all the way to February. This is a very extended move with a few breaks in between. So we want to watch. And it's we've got a very steep trend line, which is kind of parabolic, right? And if everyone is bullish, there's no one left to sell to. And that usually leads to a major break. So I wouldn't be jumping on any longs here. If we can break 1265, I think I would. But if we get hung up there and we don't get above there, I think we come crashing down. But 1265.03 is my key, and because there's nothing there to stop it from moving much higher if it broke that level. Okay. All right. So we've covered the majors, we've covered the gold, and let's go to the news. So let's go ahead and pull that up. And we're going to look at the economic calendar found on Forex Factory for the week of February 26, 2017. And we're going to look for the high impact. And there's lots of things. Oh, Greg, look at all that news. Like, what am I going to watch? I usually pay attention to the red impact. Sometimes if there is a series of orange ones, I'll take a look at those, like right here, a big block of news. But for the most part, I kind of ignore the yellow ones, focus on the red ones, and if I see lots of orange ones together for a particular country, I pay attention to that. Okay, so let's look at Sunday. We do have some operating profit out of Australia, and that's supposed to be 8.0 versus 1.0, and I dropped down to 830 for Monday. The big focus is going to be on the core durable goods orders month on month. They're expected to be flat 0.5 to percent for the previous number, and the forecast call for 0.5%. Now, if we see a higher number, this could ignite a dollar move. Okay. If this surprises to the upside, 0.6, 0.7, then the euro definitely starts to fall. I'm not saying usually, and I'm not going to say definitely because there's no definites in trading. So run away if I start saying definitely, right? But usually when you have a country has higher durable goods orders, it's good for the currency, and usually the currency rises, okay? But sometimes the news can be funny. You could have a good number, but it wasn't as good as the whisper number or what the street thought it could be. They thought maybe it was supposed to be 0.9. Well, 0.7 missed the whisper number. It's like, okay, so that's just a guide that if you're like getting in the market and you're seeing a really super like a 1.0 print, I'm looking at getting long US dollar if I see a good number. Okay, but like I say, it doesn't happen all the time. But remember, we play. You gotta be big boys and girls here. We're playing with odds and probabilities, and there's no guarantees. Okay, we can only give our best guess and use stops because we know we can be wrong. All right, durable goods orders month on month. In fact, look at this. This is the month on month durable goods. The core durable goods excludes autos, right? Now, if you take in autos, then you expect a rise from negative 0.5% to 1.6%, right? Pending home sales expected to fall, which could hurt the U.S. dollar. Okay, and then we have FOMC member Kaplan's going to speak at 11 a.m. Let me just go ahead. New Zealand trade balance, we've got that's coming out, and it's supposed to actually go from negative 41 million to negative 3 million, and that actually might be kind of positive for the New Zealand dollar. Okay, and given that we're at a kind of extreme level, maybe that's like the one last gasp before we drop for maybe a Tuesday. So we'll see. Okay, so watch that if that number comes in as forecast. Remember, another thing, forecasts can be totally wrong. They pay these guys thousands of dollars, to hundreds of thousands of dollars to make these forecasts, and they can get them completely wrong. Okay, so here is Tuesday, February 28th. Nothing looks good here except GDP, a big one at 8:30 a.m. Preliminary GDP quarter on quarter expected to rise from 1.9% to 2.1%. That could be good for the U.S. dollar and could really send the dollar storming higher. Okay, so we want to keep our eye on that. Even though going back to 8:30, the resource material price index could be an interesting trade for the Canadian dollar because Canada supplies us with oil, lumber, and lots of natural resources. Prices of those natural resources, if they come out soft, less than 6.5%, that could weaken the Canadian dollar, could send the U.S. dollar higher, or vice versa. We could see higher resource material prices, and that could be good for the Canadian dollar, and the dollar CAD would fall in that case. Okay, hopefully you got that. Come again, Greg? What you say? What you say, man? Okay, let's go at 10 a.m. We have U.S. We have the Conference Board Consumer Consumer Confidence. CB stands for Consumer. Conference Board. I just said it right. Okay, it's supposed to fall from 111.8 to 111.1, and if we do see a higher consumer confidence, that could be a big push, because sentiment, what people believe, is what really strengthens the market. If people believe that the economy is getting stronger, their belief can drive their purchases. They feel good, they purchase, but if they don't feel too good, they feel kind of depressed. Even though things are good mathematically, if they don't feel good, then we could see sales and economic activity drop, and that would drop the currency as well. So that's why who cares if they're confident or not? It makes a bit. It's very important, consumer confidence, and you can see the currency move 50, 60, 70 pips just on confidence if it's better than expected or worse than expected. Okay, 7:30, we have GDP out of Australia, quarter on quarter, expected to rise from negative 0.5% to 0.7%. Okay, now if this disappoints or comes in less than 0.7% or closer to negative 0.5%, maybe they get this number completely wrong, then we could see the Aussie trigger a big sell-off, right? And sometimes I think those numbers are kind of set up to disappoint or to create whatever they want to create. So the charts tell me that it's going to be a bad number, right? But they forecast a good number, and they could probably just want everyone on the wrong side of the trade. I don't know. We'll see at 7:30. Tune in, right? All right. Chinese data, and it's a high impact. You say, well, why do we look at that, Greg? We don't trade the renminbi. You can, some brokerages you can do that, but the key is that China is one of the largest trading partners to Australia and New Zealand. So as China goes, Australia and New Zealand go too. So if China catches a cold, then Australia and New Zealand catch the pneumonia or something like that, right? And I expect it to fall from 51.0 to 50.9, and I've seen that. I've seen good data come out of Australian dollar rally, and then right after that have Chinese data come out negative and take the Australian dollar down. So it might not even be the Australian data that actually takes it down. It might be the Chinese data that comes out slower. They are forecasting some slower manufacturing PMI. From dropping PMI from 51.0 to 50.9. You're like, Greg, this is so confusing. I'll just think China strong, Australia and New Zealand strong. China weak, everybody is screwed, okay? So, there's like, 2 billion people over there, a billion and some odd numbers there. Okay. Now, I'm just going to keep going down to the high impact ones. We have German CPI. That could be good too. Negative 0.6%. CPI stands for Consumer Price Index, but just think of inflation. I stands for inflation because, hey, if the prices are going higher, hey, that index is going to go up. And inflation usually means the currency is stronger. Now, we're in downtrends on the euro right now, so these numbers may be completely off, right? So we'll see. Now, let's go down to on Wednesday, March 1st. And we're in March, manufacturing PMI. Where does the time go? Man, time is just flying. It's supposed to go from 55.9 down to 55.7, the drop. That's what's forecast. And if this is so, we can see the pound fall. However, if we see a surprise number to the upside, maybe it comes in at 56, then we actually could see a rebound in cable. Now, cable isn't kind of like a funky downtrend, so this might just be a little counter trend rally that we can fade, right? Or we can trade it to the north side if it does what it's supposed to, is anticipated. But actually, it's forecasted to go lower. So you want to watch what's going on there. At 4:30 a.m. Eastern time, that's going to happen. Maybe you're going to be asleep, and so you might miss it, and that's okay, right? Let's go ahead. 8:30. There's no red data for high impact data for the U.S., but the orange ones, there's two of them right there. There's core PC price index, which is kind of a measurement of inflation. It's supposed to rise from 0.1 to 0.3. That could really move the U.S. dollar higher. But the personal spending falling from 0.5 to 0.3. Well, if prices are going up, and that means people can spend less. That makes sense. It still would probably be good for the U.S. dollar. And then we have Canadian current account deficit. Or current account. There seems like all these countries are on a deficit. Does anyone have a surplus? Negative 18.3 billion. And if it comes in less negative, it could be bullish for the Canadian dollar. However, if it comes in more negative, like minus 20, okay, well then that could make the Canadian dollar weaker, okay, especially if you want to pair it against the U.S. dollar. Now let's go ahead. At 10 a.m. we've got some red high impact. We have the Bank of Canada rate statement. Oh my goodness, that's going to be huge, and that could really send the Canadian dollar rocking and rolling. They're expected to keep rates unchanged at 0.5%, and because nobody really wants to start raising rates except for the U.S., and because they don't want it to be turned into a high yield currency where everyone is like piling all their money in there, and that creates all kinds of instability for them. Makes their cost of their exports more expensive. And so ISM manufacturing is a U.S. data point. PMI expected to rise from 56.0 to 56.1. If it is higher than 56.1, expect the U.S. dollar to move higher at 10 a.m. Eastern time. Crude oil inventories, I like looking at that, especially if I'm trading Canadian dollar, because Canada is one of the largest suppliers of oil to the U.S. And so 0.6 million barrels is supposed to be there. If we have a supply glut, like we have 2.0 million barrels because we're not using much oil, then that could send the Canadian dollar down. However, if we see a draw, which means we have less than 0.6, maybe it comes in at 0.2, means we're using up a lot of oil. Supply and demand makes the Canadian dollar more valuable, okay? And we can see dollar CAD fall. So that's at 10:30 a.m. Eastern time, and that is all happening. Lots of stuff going on. March 1st, it's going to be a busy day. Thursday, March 2nd, we have construction PMI out of the UK at 4:30 a.m. Eastern Time, expected to fall from 52.2 to 52.1, and that could get the pound started at 4:30 a.m. Eastern Time. And so remember, if you're trading at like 3 a.m. Eastern Time and nothing's going on, it's because traders are waiting for 4:30 for this announcement. So you might see triangles, consolidations, sideways ranges up until the big news announcement. So hey, if you don't want to wait through nothing, through boredom, just take a nap, go to sleep, wake up, and maybe 15 or 20 minutes after this announcement, you can trade. So it's not how often, just choosing the right time to trade. 8:30 a.m. we have Canada has a GDP month on month expected to fall from 0.4% to 0.3, and that could be bearish for bearish for the Canadian dollar, but bullish for dollar CAD. Unemployment claims expected to rise from 244,000 to 245. That's a weekly number, and it changes, and it's very volatile, and it varies between 240,000 to 250,000. So, but sometimes you get a knee-jerk reaction in the currency if this is a bit higher than normal. Okay, but if it's lower, a low number is good. Unemployment claims. Okay. So let's go ahead and go to Friday. We don't see anything major here, and we do have going on Friday. We have PMI out of the UK at 4:30. PMI stands for Purchasing Managers Index. It's supposed to fall from 54.5 to 54.2, and we might see, like, again, if we're day trading the market, waiting till about 4:30, afterwards maybe 4:40, 5 o'clock. After this news announcement pass, then you could probably catch the news fade reversal, a news breakout, a number of things that can happen. But if you're trying to trade ahead of it, you might get stuck. So you want to make notes of this on your calendar, so when you're trading, you can avoid the pitfalls. All right, 10 a.m. we have ISM non-manufacturing PMI that's going to be released, expected to rise to 56.5 to 56.6. So you can see if these forecasters are correct, and many times they're wrong, if they forecast it correctly, they're anticipating this higher number. This will be beneficial for the U.S. dollar, and we could see a higher U.S. dollar. Okay. Now Sunday, hey, we gotta get retail sales out of Australia, and we'll talk about that next week. Okay. So that's the news that's gonna come out, and I want to share with you about the new Pip and Run trading room that's gonna be open for people who join the My Forex heat map. And so we're gonna go ahead. Let me go ahead. Just give me a moment, and we'll go ahead and get you over there, and I'll show you the new trading room. Okay, guys, now I know you remember the Pip and Run trading room for our open house, and it was such a huge success. I had many people come online and ask me, Greg, when are you going to open it back up? I really enjoyed it. I really want to be part of it. How can I sign up? And right now the group has been archived, and there are ways to get involved, like clicking the link there. But lots of, you see all the great trades, people making 50 pips, 391 pips. Just being with me, alongside with me for the 2 weeks that we were together. Lots of people who have just made pips and have traded really well in our room. And the power of working together is so incredible that I wanted to give people another chance at doing this. Okay. And being part of the family. Okay. So what's going to happen is that that's going to be a bonus that's part of my Forex heat map. My Forex heat map is an indicator that I created, which allows you to see what's popping, what's hopping, and what's moving in the market. Right now everything's gray because, hey, the market's closed, right? But when the market opens up, things in green will be up here, and those are big, great long trades. Things that are in red, they're going to be great short trades. And it's cool, but there's a button here that will allow you to get to the VIP area, where you'll be able to join our group. Okay, and that's the only way you'll be able to join the group, is to actually sign up for a gold account, a gold membership. So you go to memberships, and then you can become a gold. Actually, I'm sorry. No, Yeah, gold members will have this. Anyone who's a gold member now will have access to the room, and anyone who has not not on any plan, then you can still have access to it. For $21.99 a month. Okay, so not only will you get the MyForex heat map, but you will also, in addition, for $21.99, get access to the Pip and Run room. $21.99 each month. You'll have a free trial, and the free trial will be 7 days, not 30 days. It's a free trial of 7 days, and on the 8th day, you'll be billed $21.99 each month. Okay, and that allows you to benefit from being part of the group and have access to a powerful indicator, and that is for $21.99. If you want to take your trading to the next level and take advantage of these bonuses, then you can pay up for the year, $199, and you'll save a pretty good penny there, right? You'll save some money there. You'll save about $60 if you go ahead and upgrade to the gold membership for $199. And at $199, you get all the bonuses, and you also get access to the Pip and Run room. The Pip and Run room will reopen only for those people who are part of the MyForex Heat Map family. So make sure that you come to MyForex Heat Map and sign up for either the bronze level, right, or the gold membership, okay, or silver. It's a 3-pay. If you don't have $199, then you can pay $79 each month for 3 months, and then get and then the rest of the months will be free, right, for 3 months. So $7.99 for 3 payments of $79.99, and then you have full access, and you'll have access to the Pip and Run room. Again, that's the room that's located here. That will reopen for you guys based on popular demand, because you guys wanted it. I really like being with you guys, and now I will be there to post trade ideas once a day. But remember, I do have clients that pay me $15,000 and up to work with them in another group. However, the synergies that you have working with each other, you can always upgrade to our other groups as well as you have money, as you make pips. Okay, but I'd love to have you together again in this group, and this group will reopen for those of you who join MyForex Heat Map. Again, you go to www.myforexheatmap.com, and that way you can join the room and also take advantage of some really cool bonuses, like deposit bonus. You'll get essential access to the quick start videos, and the quick start videos are pretty cool. Okay, you get access to the quick start videos, video library that's here. There are how to choose a broker, how to open a trading account, how to find a bullish trend, how to find a bearish trend, how to do risk and money management, tips for successful trading. We have all those things available to you in the MyForex Heat Map site. Okay, so it's not just the heat map; it's a social community. It's also videos and education. You can learn how to trade. There are a number of, so if you go to the bonuses, and let me go here. Yeah. So you can have access to the Forex Foundations course. Okay, and you get there's 5 lessons: Introduction to Forex, how to trade the carry trade, overnight interest, types of trading styles that fit your lifestyle, currency crosses versus majors, how to use margin and leverage. And this is a $297 value. And when you're a gold member, you get this course for free. You just enter the code Great Start at the payment page, and then you can take the course now. So if I click it, and I should be able to take you to show you inside the course. So there's lots of education involved here to help you make good trading decisions. And here's a freshman level Forex course, and there are more videos here. So you get 8 quick start videos and another 9 videos here that are located in our Forex Foundations Level 1 course that's available to you. Okay. And there's some there's other things. There's broker discounts, the $2,000 deposit bonus, okay, for when you deposit with Xenia. You'll get all kinds of deposit bonuses as well. Okay, so again, that allows you to also get, again, people who are gold members will automatically be added to the archive, be added to this room. They're going to be unarchived, And then anyone who becomes a MyForex Heat Map member at any level, whether you're gold, silver, or bronze, you'll have access to the room. And it's just a monthly fee to be in it, and that's a great way to get started with my training and with being part of a community. Okay, so look forward to seeing you there in the Pip and Run Forex community. And I also want to encourage you to, if you have not chosen a broker, that you choose Xenia as your broker, and mention that Greg McLeod and the Elite Traders University referred you in order for you to get access to special content as well. Okay, so you can go to xenia.ky, and that's that is the website, and then you can open your account here. If you need a demo account, you can get a demo account as well. But xenia.ky, that is the website. All right, guys, that's going to be it for me for the Pip and Run map. I want to thank you so much for joining me, and I look forward to trading with you and coaching you, and we'll see you soon. All right. Oh, one more thing. I want to tell you about Marco and the new, let's see if we have that up. Yeah, this is our, the Dragon Slayer aggressive scalping system. We go ahead and you can sign up for that as well. Okay, so that's going to be fantastic, and Marco's been doing really well in his trades, and we look forward to being able to mirror his trades using that. Okay, we'll talk to you soon. Cheers, bye-bye.
Hey guys, you want to catch the next big Forex move? Then make sure you stay in touch with us via social media. You can follow me on Twitter, Greg McLeod. That's MCLEOD, Trader, TRADR on Twitter. You can also join our distribution list at www.elitetradersuniversity.com. You can also join my free Pip and Run group on Facebook. And make sure you check out my YouTube channel for my latest scalping videos, Gregory McLeod Trader. Make sure you give us a like, a thumbs up, and share, and also subscribe. Be a subscriber so you can be alerted of my next videos. You can also connect with me via Instagram, simply Pip and Run. Or you can just reach out to me via email, greg@elitetradersu.com. Look forward to hearing from you, and have a great day. Happy pipping. Cheers.